A very warm welcome to our viewers. We are on Sunday, 5th March, and it has been another interesting week in the crude oil markets. With the crude oil closing, we are talking the Brent at 85.83, which has been a good 3%, 3.2% increase over the previous week's closing. And that has been something which has really been interesting. The markets have really put too much of faith onto the bullish data coming out from China, particularly the PMI numbers, which really came as kind of much anticipated good news for the bulls in the market. And this, to a very large extent, overshadowed the concerns onto the crude inventory builds and the recessionary fears. And what was also fueling the bullish trend over the past week was the continued hope of the Russian production cut announcement of 500,000 barrels per day. But as we noticed earlier in our previous episode, so far that Russian announcement is for the month of March. So we would need to wait for further confirmation on that. And some of the key questions which we have been receiving is first and foremost as to what kind of the bullish trend price support is likely a result of the Russian production cuts or its potential impact on the exports, or whether we see any long-term effect. So our view is very clear. We do not see a long-term impact of the Russian export curbs or the potential export curbs. What we have seen post the Russian-Ukraine conflict, that it is not so much of the supply issue, but the supply chain issue. So the production and the supplies have been fairly robust and have not really seen much risk. But it is the supply chain which has been impacted by the Russia-Ukraine conflict. And that has its own advantages for countries like China and India because of the entire sanctions regime. So a large section of the market stands to gain. Overall price impact is still deflationary, and we do not see looking forward any supply concerns whatsoever. So having said that, there's another question which we are being asked about particularly is even after the continuous increase in the interest rates by the central bank, inflation continues to rise, forcing central banks to continue the hawkish stand. Will this kill demand for petro products and lead to global recession? Now that's something very, very important. Let's put it this way: the inflation is real, and the Fed hawkish stance is also real. So they have made it very clear that their continued tightening policy would continue for some time. Whether it's going to be 5% or above, up to 6%, that's yet to be seen. But it is tighter for longer in terms of the hawkish policy. So to that extent, its impact on the inflation and the impact on the product demand is already being felt. How? If you look at the EIA crude inventory data adjustments, it gets very interesting. They have given out a long set of explanations as to how this crude inventory adjustment or the data reporting correction has been. So basically it is crude blending, which has kind of overestimated or overcounted the crude exports and potentially undercounted or underreported the products exports. And the more important thing coming out of this is we could possibly be looking at the data which suggests that the US is running onto the product demand side roughly about 4% lower over the corresponding month of the last year. That could be big. So this data point of 4% reduction in product demand in US in the month of February is yet to get the kind of vetting it needs to. So we will wait for that. But this kind of anomaly or this kind of data is very real and very concerning when it comes to the demand side economics. So, which largely feeds into what we have been seeing the data in terms of the demand destruction across US, China, and the European Union. So with that, we see further bearish trend. Despite this last week very bullish price increase of about 3.2%, we do not see major move up at this point for the next week, and we could be looking at again a minor correction onto the prices. Thank you so much for joining.